Howdy. Welcome back to
Howdy.
Dion Talk. In today's video, I'm sitting here with my friend Troy. Normally in my deal deep delves, I want to know the really deep details into one deal. But what I'm going to do today is talk about a first deal and a last deal. The one that got you into real estate and the one that happened the most recently, because in the market of 2021 and with the pandemic going on, a lot of people are stepping back thinking, there's no way I can invest right now. Prices are going up too high. I just closed on a duplex a few weeks ago, and I'm trying to share stories of people who are still currently investing. So if you could, Troy, take a few minutes, tell me a little bit about the size of your portfolio, and then break down that first deal that got you into real estate.
Okay, so I have about 15 units right now. I started buying about, again, second time around here, like 2.5 years ago. And I bought about 25 properties, half of them, somewhere around half of them we flipped and the other half we're keeping. It's kind of a work in progress because, yeah, I am still investing. And so, like, I'm buying two more in the next month. I bought one at auction last week. I don't understand these people who are like, it's not a good time to buy, because I just seem to find them. But my first deal ever was back in '96. I didn't own a home, but I loved real estate and was looking at a lot of properties. I came across this 2-unit. It wasn't a 2-unit. It was 2 half doubles on 3 acres in my hometown. Beat up old place. Went to look at it, and this old guy living there, 80 years old. He lived there his whole life. And so I asked him, I said, Paul, what are you going to do if I buy this place? He says, I don't know. I just can't take care of it. So anyway, he owner financed it for me, $83,000. He needed $10,000 down. I didn't have 2 nickels rubbed together, but I had a credit line. So I used the $10,000, put it down to get the property. He owner financed it for 2 years. It appraised for 130 right after I bought it. So that was good news. And then 2 years later, I was buying a 4-unit, and I got a blanket mortgage for that and the other one. I left settlement with $1,500, no money out of my pocket.
The key takeaway is you purchased your first property by using a $10,000 line of credit that it sounds like you had with your business, and doing owner financing. So you got your first rental without any money out of pocket. And then when you refinanced 2 years later, since it appraised so much higher and you were buying the fourplex, it's like you purchased equity without spending any money.
Yeah, I thought it was pretty cool. And at the settlement table, I remember the attorney looking at me and he says, "You're borrowing $250,000 or whatever it was, and you're walking out of here with $1,500." He said, "You must be doing something right." And I just kept thinking, yeah, I guess I am.
How long did he rent the unit from you?
I think 4 or 5 years. And I basically determined I was going to let him live there until as long as he wanted. But he passed away, and then we fixed up his place, and I think I sold it shortly after that. So,
and the reason I wanted to do first deal, last deal is most people watching say, well, in '96, it must have been great. What happened around 2008 when the recession hit?
Right. So I bought a few more properties. I got a total of 25 doors, I think. Was overwhelmed because I had 5 kids, a business, a construction business, and I was doing everything. And so I got burned out and thought, I'm going to sell these. And the rest of the other properties I got didn't cash flow great, but there was equity in them. Around 2005 and 6, I started selling them. Didn't realize how good of a move that was until 2008. I got out of the game then, didn't really want to get back in it because I was burned from it. Focused on my construction business. In 2010, I bought a row home, and then I bought another one in 12, and I was pretty much content with that. And then I was talking with April Crossley. I don't know if you know April, and she was like, "Why aren't you buying more property? Why aren't you buying properties?" And I'm like, "It's just such a pain. I'm not going to do it." And she's like, "Well, that's because you were doing it wrong. You got to do it this way and put in the right system so that I don't have to do everything." So January of that year, I started buying, and bought, whatever came to me that made sense. Like, people would say, "Well, what's your strategy?" Like, anything you bring me, I can make money on. That's what I'm going to do. Like, we have.
And what year was that you decided to start buying more?
2019.
From 2013 on, almost everyone that I know has been saying you can't invest, wait for the crash, wait for the correction, prices are going up. So, and then 14 and 15. And I purchased some places in 2018 that I refinanced in 2020 that had appreciated, over $100,000 each.
Yeah.
The people right now that are saying, I can't buy because it's too expensive and I'm going to wait for the crash or wait for the correction, that actually the investors I know don't see coming. Let's talk about this last deal, because I know there are people right now that in 2018 thought prices are too high. So right now they can't even comprehend the numbers. What was this last one that you purchased?
Okay, so the last deal I found, the other thing people always ask is, how are you finding deals? Networking for me is the main thing. That's kind of how I find them. I tell everyone about what I do. This is a part-time thing for me. I have a construction business going on, so I don't have to do it all the time. But I still seem to get a lot of deals. This last one, I got through a guy, and so they were wholesalers, and basically I said to him, I'd give you 47,000 for it. He negotiated the contract with the owner. They paid the owner 40,000, so they made seven. This one I paid 47. I'll probably put about 10 to 15,000 in it total, and it'll be worth, when I'm done, probably 100. So the deals are still there. I've done at least, I think, 7 or 8 deals since this year so far. So the deals are out there.
One of the problems that a lot of new investors have is the investor's opinion is based on what they hear and not what they do. So I was talking to a young couple not too long ago, and they said, well, we can't buy in this market. There's just no deals. And it wasn't even networking to find wholesalers, to find off-market deals, the path that you just took. They didn't have an auto search set up off the MLS with an agent. So they had no data on whether there's deals or not. All of my deals are from the MLS. I have never seen or heard of an off-market deal. I created a YouTube channel, got 5,000 subscribers. I've never had a wholesaler come to me and say, hey, we have a deal that you could look at. I've had 1,000 wholesalers come to me and say, would you like to sell? Which I don't do. But so if you're networking and you're finding the deals, there are people who aren't even searching on the MLS saying that there are no deals, and I'm still finding them on there.
I mean, that's interesting. Like when I first started searching back in the late 90s, early 2000s, it was all in the MLS and through realtors. And I don't look on the MLS now, but it's only because I'm not looking for properties. I don't ever go looking for properties, or just people just know that I will buy, and they know what I'm looking for. When they see something, they'll bring it to me and say, hey, this is up your alley. Do you want it? And I'll look at it, and I'll either take it or leave it. I've thrown away a couple because I'm just so busy at the moment I can't tackle anymore. And then last week I bought this farmhouse. So I'm like, the deals are out there. They're out there.
Okay, so you paid 47,000. You're going to put 10 to 15,000 in it. It'll be worth 100,000. What part of the United States is this property in?
This is in Reading, Pennsylvania. I was like, people from outside of Reading are like, oh, don't invest there, don't invest there, because it's low income. And so there's out-of-state investors should not invest in Reading. They've done it and they lose almost 99% of the time. I find guys from the city, contractors from the city, to do the work there. And that's a lot of babysitting. It's a lot of work. I don't know, because I have a construction background, it really helps, because in these low income areas, you already get eaten up with the maintenance, right? Maintenance and vacancies. Guys that I've invested in, networked and learned and met a lot of guys that will do the work there. Handyman, plumbers, electricians. But that stuff doesn't happen overnight. It's a lot of work, as you know.
But it sounds like you learned your lesson the first time when you got burnt out, and this time you were thinking, I can do all this myself. I have a company. I can have my guys do this. Or I can not burn myself out, and I can find handyman, and I can find contractors and network. So what I run into a lot is people saying, I live in Los Angeles, I live in Seattle, I live in, name any big city, and they say, I can't invest here because prices are too high. And Philadelphia is a pretty large place, probably more expensive than Reading. People in Seattle can go an hour and a half out in any direction. And, I purchased a duplex a couple weeks ago. In Seattle, it'd go for 950,000. I purchased it for 400,000, which is a lot different than 47,000.
Oh, yeah.
I buy it, I get the keys, I get the rent check. Like that's it. I send a handyman to fix a couple of lights and replace a heater in the wall. I don't spend any money. I don't put any effort into it. I'm going to get better than a 10% return on this investment. And so for me, I almost want to spend more money, because the more money I spend getting that 10% return, the 10% gets bigger. It scales with the size of the property, or the cost of the property. People living in Philly and LA, when people say I live in LA, I lived in LA, but it was 2.5 hour drive to get to the city of LA from
Wow.
where I lived, but it's that
Yeah.
big of an area.
Hmm.
What's your plan with this property now that you own it?
My plan on it, my original plan was to, when I bought it, was to flip it, turn it over, and just take the cash out. But now, because values have gone up so much in the last year, and probably my guess is they're going to continue because inflation is just starting to hit. Like this year, I expect to see double-digit inflation, which will drive up real estate, right? That's generally what happens, right? So I think I'm hanging on to everything right now, instead of selling it off, or at least keeping it for a year or two.
Your property that you purchased for 47 that you are deciding to hold for more than a year and rent out
Yeah.
before you flip it,
Hmm.
then that becomes a capital gains tax event instead of income tax event, which most people, if they haven't done a flip, it doesn't matter how long you hold a flip. It could be 2 months or 2 years. That's
Yeah.
still taxed at your income level unless you've rented it out. Once it
Right.
becomes a rental and you've had it for more than a year, then it drops down to the
Yes.
capital gains tax, which
Yeah.
currently is what, 20%. They're talking
Yeah.
about going to 39% with it, and we'll see what happens next
Right.
year.
Hmm.
But the thing that's really important that I want to point out to people before we land the plane is there are people sitting on the sidelines absolutely convinced that prices can't go higher. There's a correction coming, there's a crash coming, and there's people on forbearance, and there's unemployment rate, which actually is less than it's been for the last 10 years. It's around
Hmm.
6%. um, and an investor with, not to call you old because we're about the same age, decades of experience in investing, is not flipping a property that would make, what, $30,000 or so,
Yeah.
because you're going to make more money next year or the year after,
Hmm.
because you have confidence that inflation is coming, asset
Hmm.
values are going to go up,
Yeah.
and add the tax value at the end, the tax tail, not the tax
Hmm.
dog, of it being capital gains that way is a brilliant move. I want to thank you for taking the time to come on here and share this,
Yeah.
because
Sure.
there are people who are sitting on the sidelines waiting, missing out on all of these deals, the cash flow, the appreciation, the tax benefits, tenants paying down the mortgages. If somebody wanted to get a hold of you and they had some questions, what would be the easiest way for them to do that?
You can follow us on Instagram at Good Contracting LLC. You can follow us on Facebook. It's just Good Contracting.
After hearing the prices where you're investing and where I'm investing, I think I'm going to have to sell all of my properties and reinvest in Redding. But not today.
Redding is it's not for everyone. Like, right.
So there are definitely, and I'm probably going to edit that out and change what I just said.
No,
There
I
are
know what you
areas of
mean.
Tacoma that I wouldn't want to invest in because it's kind of a war zone.
Yeah.
It sounds a lot better. So having boots on the ground, having knowledge of the neighborhoods, or having lived there or being close enough to get there, like you said, is key
Yeah.
too. Awesome.
Yeah, there's several things with working in a city like that I've learned. Like, there's lots of regulations, right? So you got to know your way around the city. You've got to know city council. Like, there's so much involved in it, and it takes a while to figure it out. And so you can't. It's hard to do that when you're out of state and you're not there. They see the numbers and they're like, these are crazy good. Um, and right now we're being bought out by New York. Like, New York is flooding out of there, and they're buying. The last two properties I sold were from people from New York. The realtor told me that New York is buying the city overnight, and it's literally what's happening. I know it's happening all over the country in different places where the cities are emptying out.
People talk about wanting a correction or wanting a housing crash, and they think that there's a market. They forget that there's about 400 in the country. And so New York, LA, Seattle, people are moving to places like Redding or
Right.
Tacoma, Washington, because you can work from home. So
Mm-hmm.
you want an office room in your house. Kids are being homeschooled, so you want
Yeah.
a place for kids to be. People want space, and you want to avoid crowds because of a pandemic. People want to avoid protests.
Yeah.
the demand for areas outside of the city. And so I would say there's probably 12 markets that are going to be kind of soft over the next few years.
Yeah.
But if you're not buying in the middle of a big city, anyone who buys now in 2022 is going to be feeling exactly like you do.
Yeah.
Because you bought it in 2018 for 30 and it's worth over, 100. And you're just sitting back with the worst problem that anybody has of, what am I going to do with all this money?
Before the pandemic, we had an inventory problem. Now we have a huge inventory problem because of all the people. And it's not going to be, I mean, there's been waves before, like I think it was late 70s where people were moving out of the cities, but now it's different because people can work from home. That's a game changer. Like it really, I don't see it.
No, I'm seeing the same thing in transportation. You know, before the pandemic, there was a driver shortage. You can Google it, and there's a huge driver shortage. And then the pandemic hits, and everybody's having everything delivered, and they're not going to the stores themselves.
Yes.
I can't train people fast enough. I've got companies coming in that used to refuse to talk to schools because they're brand new drivers that now have a $10,000 sign-on bonus. And this is a local job that starts at like $80,000 a year. They can't find drivers. So real estate, transportation, we're all seeing the same impacts. So if you have any questions, Troy has a ton of information. I would reach out to him on Instagram at Good Contracting LLC.
Yes.
Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.
The number you have called is not in service at this time. So how are you enjoying the whole YouTube thing? Like, what are you getting out of it? Do you get paid for it? Probably not very much.
It's kind of, I got monetized. I didn't expect to for like a year. So now I'm getting about $500 a month or something. So
that's nice.
Go to dinner or something.
What's the goal?
The thing is, so I'm really active in BiggerPockets and the Facebook groups, Real Estate Rookie. You've seen some of my posts probably.
Yeah.
And everyone reaches out with the exact same question. Should I get an FHA loan? Should I get a conventional loan? Should I pay my mortgage off? Should I use a mortgage? Should I buy all cash? Do I need an LLC? Like all of these questions. And I like to answer, but it's really cool to just message somebody and say, hey, here's a video on FHA versus conventional. People would call and say, can you teach me something? And I would take like an hour-long call. Just I'd like helping people.
Yeah.
But 10 hour-long calls in a week is another job.
Right.
And now I make a 10-minute video. It covers a simple concept. I can refer people to it. And I thought, I'll make 10 videos. I'll have 10 answers.
Yeah.
I'm coming up on like 80 videos now.
Yeah, right.
And I'm like, there's so many subjects I want to cover,
Yeah.
So I'll just keep doing it until, I don't know.
Yeah, I get people asking me and telling me now that I should do something because like people ask about contractors all the time, how to deal with contractors. So a couple of people are like, you should make like some short videos of how to deal with contractors.
That's how it started for me. Everyone was saying, because I'd answer a question, I'd try to be as articulate as I could, because these are the things I would want to know. And they would say, you should write a book. Right? I'm like, I can't write a book. And then they go, you should do a YouTube channel. And I thought, I would have maybe 4 or 5, like how to get a tenant to request a rent increase. Okay, I know people are going to want to watch that. And then I thought of 2 or 3 others. But if you started doing videos on, how to deal with contractors or whatever, you would start doing 2 or 3 a week. And it just becomes a thing, and you just add it to your routine.
Because there's all kinds of questions when it comes to that. But the thing is with your videos, I think you have a niche going on because the time frame is key. You're entertaining but not annoying, right?
Thanks.
Good content,
so that was what my brain said was there's funny YouTube channels. I watch Screen Rant and a couple of other ones where I just laugh for 5 minutes, right? Yeah. And then there's BiggerPockets, one rental at a time. These guys that, they're serious and here's good data. But there's nobody that's like, hey, here's some data and let me make fun of myself for a few minutes.
Yeah. And it's not like, it's enough. It's not too much, but it's enough that it's entertaining. There's lots of people making videos and like wanting to do this kind of stuff, but you have to have a certain personality for one, but you're 10 minutes or whatever it is, and just light entertainment. It's perfect.
I mean, that's the goal. Is just keep it super short. And the first time I did a video where I like argued with myself, and I thought I'll put Toomey up here with different opinions. The goal was, I can't say you shouldn't have an LLC. Like my personal opinion is I'm never going to have one. I have one for a trucking school. I have one for a nonprofit, but my rentals, umbrella insurance, none of the problems that comes in an LLC. If I said that on my channel, I would lose thousands of people that are just convinced you have to have one.
Right.
But when I do an LLC video and I have a cowboy who's saying, I don't want an LLC because I'm a cowboy and I would never do that. And then I have like a business person in a suit going, here's all the reasons why you need an LLC. I can say my opinion and the counterpoints, and I won't lose anybody.
Right. No, I saw a couple of those. There's where you have the two. That's good. Yeah. And you can basically present this side of it like you're almost playing both sides as if you believe each side, or
correct. Right. So that's the thought. So those are the only ones I script. I actually come down with what is the argument for and against, and when I say it, that's my opinion. So
that's good. I really like it. I enjoy it. So